everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, December 13th, and I'm actually recording this episode about 15 minutes before the closing bell, so this is not the final tally from the market today, but it has been all over the place. We were as low as around 39.92, as high as about 4,100. The high actually came up. And it touched the bottom of this zone that we had mapped out slightly above the trend line, and it actually matched this candle from the 1st of December. But we're back underneath the trend line right now, sitting right around the 4,000 level. I did suspect that we'd get back to this 4,000 level, but I didn't think we would push through as high as we did. The markets had a big reaction today with CPI being lower than expected. This is the exact same reaction we got last month when the CPI came in lower than expected, and then the market sold off after the FOMC meeting. Now that could be different this week because tomorrow it is expected that the Fed will raise interest rates by 50 basis points instead of 75. But if any of the buying today was reliant on the fact that maybe the Fed would not hike interest rates by 50 basis points, and it might even be 25 tomorrow, if that's what they were thinking from the CPI data, then we could still have a pretty heavy sell-off tomorrow. But it is going to be interesting. The market is really volatile right now. It's all over the place. I mean, it could close much higher or much lower than what I'm recording right now, which is 13 minutes before the market closes. Right now, it's at 4,023. It could be a lot higher, it could be a lot lower by the time it closes, but there's been a lot of volatility today with that number that came out slightly lower than expected. And the reality is that CPI year over year is still over 7%, and so that's not a good thing. We still need to get that number down. It is becoming more evident that inflation has most likely peaked now that we have back-to-back months of not only decreasing CPI, but it was lower than expected in both months. So that's a good indicator as far as inflation most likely peaking, but the reality is we still have inflation that's way too high. It's at 7.1%, and the target is 2%, so we're still over 5% over the target, over double, and that's not a good thing. So the Fed still has some work to do. I suspect that they'll have more of a hawkish tone tomorrow when it comes to the future because of the soft number that came in today and the fact that they're probably going to raise rates by 50 basis points instead of 75, and so they don't want to give the market the wrong idea. They don't want it to get out of control, so there'll probably be some hawkish words from the Fed, if I had to guess, from Jerome Powell, but we'll have to wait and see. I'm sure it's going to be just as volatile tomorrow as it was today, but that's where I'll leave it for now on the S&P 500, and we can actually check out Bitcoin real fast before I check out of this one. And it's actually pretty interesting. Sam Bankman-Fried got arrested last night, so that's good. He deserves to be in jail, in my opinion. Bitcoin rallied hard with the markets up 4% right now, sitting at about 17.7, which is really interesting because that was around the bottom of our range from earlier. So Bitcoin's kind of approaching the bottom of the range that it was trading in for a really long time. If it cracks above 18,000, that would be really interesting. I'll have to get my levels back on this chart. I don't know why they disappeared, but so Bitcoin's rallying really hard right now, as is the stock market. I'm sure we're going to see a ton more volatility tomorrow, so please stay tuned. But until then, I appreciate everyone that watched and listened to this episode. Stay safe out there, and I'll see you tomorrow.